세계 제2위의 경제대국인 중국 경제가 흔들리고 있습니다. 갑작스러운 위안화 절하와 증시 불안. 위기의 중국 경제는 어디로 갈 것인가? 더 리더 오늘은 세계경제연구원 초청으로 방한한 데이비드 L.애셔 신미국안보센터의 선임연구위원을 만나봅니다. 급변하는 중국 경제의 향방을 예측해보고 글로벌 경제와 우리 경제도 같이 진단해보겠습니다. Thank you very much for the interview this morning. You are the adjunct senior fellow in Center for New American Security. Would you introduce briefly about the center to our viewers?
So the Center for New American Security was founded nearly a decade ago by Michelle Flournoy and Kurt Campbell, who both became very prominent policymakers in the Obama administration. It is a bipartisan think tank. I'm a Republican, a moderate Republican. There's several. Our president, Richard, is as well, and Richard Fontaine, and we have a pretty broad array of policy issues that we look at related to security. My area of expertise is on economic security issues. So economic policy, but thought about as an issue of national security. So growth strategy and trade strategy and strategy of using economic levers of power, such as sanctions, in a way to protect and advance America's interests around the world. I think what we really try to focus on is new ideas and new ways of projecting American power that don't involve the traditional use of military force, even though many of our think tank members come out of the military and have served in wars or have supported them. So it's a non-traditional approach to national security as compared to some of the other think tanks in Washington. And we've become very popular. It's one of the most popular think tanks in Washington today, even though it's quite small.
Let me ask you something about the Chinese economy first. Many people are worrying about the Chinese economy these days and Chinese market too. And concerns popped up from last month when they depreciated yuan on a lot. So what do you think they did, and do you think they depreciate yuan further in the future?
Yeah, I think that what they did last month was very strange. They depreciated the yuan by around 4%, and they caused a massive panic across the emerging markets in Korea and Japan as well. It makes no sense. It doesn't give them any economic advantage. It's a sort of half-baked policy. It's almost like they started something and then decided they had to stop it. China's been facing a lot of capital outflow. A lot of Chinese have been leaving China to go shopping, but a lot of Chinese money has been leaving because it doesn't want to be in China, because the Shanghai Stock Exchange has become like a casino, and it's a collapsing casino market. The Chinese government has pledged at the same time to move its currency toward a more free-floating, flexible exchange rate. The problem is the currency in real effective exchange rate terms is about 25% above the level of 2008. In fact, China's currency has gone up by between 25 and 30%, whereas the U.S. in the same terms, dollar, which it used to be pegged with, has only increased by 15%. So China has taken on a sort of enormous currency responsibility, which is somewhat puzzling, given the fact that they're still very much an export-oriented developing economy.
So, but some people point out, I'm not sure this is right, but the U.S. government was relatively calm after the Chinese yuan depreciation. Do you agree with this?
Well, the U.S. government our policy has been clear. I'm not speaking for them, but the U.S. policy has been we support a flexible, free-floating exchange rate. It's pretty clear based on the IMF's data that if you truly have a flexible, free-floating exchange rate, the renminbi initially at least is going to depreciate substantially. Right now, the Chinese are still manipulating their exchange rate. That's why they lost $97 billion in currency reserves just last month, because they're pegging the currency around 4%, 5% less than before, but they're still pegging the currency. If it's, you asked the question earlier, what will happen if they adopt a more free-floating currency, and will they do it? And I'm saying yes, they will. They have no choice. At the current rate, they probably have 12 to 18 months before they start to deplete their huge foreign exchange reserves, because I think there's much more money leaving China through Hong Kong, Taiwan, South Korea, all these other partners than is apparent in the statistics. So I think that in a lot of the Chinese money the Chinese reserves that have been sold have not been sold in the United States. Actually, they've been sold in Europe and places that are very hard to know the total amount of cash they've got on balance. China right now is in a position that's almost impossible. I don't think they can maintain this position for more than a few months, and if they do, sort of like Thailand back in 97, 98, it's going to cost them politically. And I don't think the Chinese Communist Party wants to fall from power or face a crisis.
And then the market is watching. Actual discussions about the Chinese economy, the growth rate, and the market is watching whether the Chinese economy will be hard landing or the soft landing.
Yeah.
So, what do you think about it, and how do you forecast about the Chinese economic growth?
Yeah, the Chinese economy has landed already, and it's a very hard landing. It started last summer, if you look at their data, just the imports in Chinese imports have been going negative. All the leading indicators have been falling for months now. The so-called Li Keqing index, which uses electricity consumption and cement production and transportation miles, I think there's several different versions of it, but there's some, you can abstract from certain core Chinese statistics which seem to be somewhat reliable, where you have long-term data like electricity production. The Chinese economy is probably growing around 3% right now. You know, look at your exports to China versus your industrial production. Korean industrial production continues to grow, but Korean exports to China and Korean industrial production have been almost moving exactly together for nearly a decade. The Korean exports to China have fallen. If you assume that the Korean exports to China correlate accurately with Chinese GDP, which I think they should, like Taiwanese exports, which are fallen, then Chinese GDP might even be less than 3% growth right now. So I don't know why the Chinese are lying about their growth rate, but it probably has a lot to do with the Communist Party's own uncertainties. That worries me.
Yeah. So you just told me that the Chinese economy, the hard landing has already started.
Yes.
Yeah. So it's going to be a disaster for the global market. So how do you think, what do you think about the effect, the influence?
Well, I mean, it's a disaster. It could be a disaster in Asian markets. It could be a disaster in global markets depending on the level at which corporations default on U.S. dollar debt. U.S. dollar denominated debt was not a big feature of the last Asian financial crisis. It was more banking crisis that eventually migrated onto the balance sheets of governments. Today, Chinese companies, Korean companies to some extent, but really Chinese companies, Southeast Asian companies, Australian companies, people in the commodities business, Chile, issued Brazil, massive amounts of U.S. dollar denominated debt. To the extent that that dollar denominated debt is going to default because China doesn't grow and import those commodities and cuts its oil imports and is not able to profit because its currency is overvalued, so its exports are not profitable, there's the potential for a global financial event, at least. That said, the last time there was an Asian financial crisis, the U.S. grew at 4.4% average growth rate, I think, something around that, largely powered by the fall in gasoline prices and the fall in inflation. Sounds familiar. The Fed raised a little bit of interest rates, inflation was curtailed, stock market boomed, technology boomed. We're having a little bit of one right now in the United States yet again. Now, I'm not saying the U.S. can escape from this. I hope we can. I sort of hope we can't because I don't want the U.S. to forget about Asia like we did in 1997, 98. But there's a danger here that Europe and the U.S. can continue to expand at some level even while you see massive distress build up. I think it's unlikely. I think we're all in this together. But that's why we really got to have an honest discussion with the Chinese. That may have begun at the G10 summit, excuse me, where for the first time ever the Chinese admitted they had economic problems. They used the word bubble several times. Honesty is a good step forward, but the reality is honesty would be better a step forward if their statistics were honest.
But some people say that Chinese authorities can handle. They have the foreign exchange reserves is almost $3 trillion, and then the capital market is not open.
Yeah.
Yet.
So that only matters if their exchange rate is floating free. If otherwise, they're going to blow through those foreign currency reserves very quickly. And remember, those foreign currency reserves also might, in some ways, be used as collateral for some of the commercial debt that the Chinese have listed. So state banks in China, Construction Bank, others, they may have debt they've listed, or large corporations. In effect, they're still publicly owned companies. So the state is sort of bound to protect them. So those Chinese reserves aren't just backing the Chinese, ability to stimulate their economy. They're backing all these bankrupt or potentially bankrupt state-owned enterprises, which have run up massive amounts of debts that they cannot repay. So maybe China's not worth as much as it looks.
So you mean that most of it is not usable?
Not most of it, but more of it than we think, and not usable quickly, I think. And the problem is this. To the extent the Chinese don't allow their currency to depreciate, then they really can't use that strategically. I mean, if they allow their currency to depreciate, they can repatriate money from the U.S. at a cheap, buy renminbi very cheaply, recapitalize their banking system using U.S. dollars, and you can make the numbers work. But if they keep this illusion of financial stability continuing as expressed through their maintaining the currency at this level, I'm afraid they're going to run again into a situation like Thailand did during the Asian financial crisis, and to some extent Korea too. Even I'm for flexible exchange rates, which is so that markets can adjust normally. But China's market is totally abnormal, largely because it's not even like a market. Their stock market is so illiquid right now that you can't really call it a market. It's not even it's more of a casino.
But one of the serious problems the Korean economy faces is that, as you said, we depend too much on the Chinese market. Almost 25% of our export goes to the Chinese market. Yeah. So we are worrying about the Chinese economy and the market. Do you think how do you think we can handle this serious problem?
It's simple. Your debt is only around 34% of GDP, right? You've been very careful about not running up a large national debt because of your bad experience in 97, 98.
Yeah.
Okay, your household tax rate's 38%. Your corporate tax rate, even before all these deductions, is like 24%. You should cut corporate taxes. You should cut, even more importantly, household taxes. Huge supply side cut. Household tax cut would be the most stimulating thing to reorientate this economy toward a consumer-led recovery. And I would focus, if you're going to cut corporate taxes, on the service sectors, that would be more oriented toward domestic demand stimulation rather than heavy industry. In fact, I've been interested in the fact that you've introduced a retained earnings surtax on corporations, largely because they're accumulating so much cash that's not being used. I think that's actually a smart move, however controversial. But it would be better to pair that with a huge tax cut for the households. See, then you become less dependent upon China. You become more of an importer of stuff from China cheaply that maybe Korean companies can make in China, export to Korea. I mean, you become a more balanced economy.
So it's kind of a way to support the domestic demand, right?
Of course, and you've got huge ability to do that. But you need to get ahead of this crisis. Start making a supply side move now. Don't wait for the panic. The panic may be coming soon.
So it looks like a kind of supply side economics.
Yeah, I think supply side economics can work in Korea. Free trade with the United States is an important aspect of this. I mean, even though your exports are focused on China, how much of that stuff gets re-exported in final product form to the United States? A lot. So, you know, there's a bit of an illusion that Korea has no choice but to do what the Chinese want. No. You need to do what the Korean people want. And what the Korean people want is lower taxes, less regulation, greater entrepreneurship, more venture capital, more freedom.
Yeah.
And I think that this government is in a position, as it approaches an election that it wants to win, at least for its successor, to adopt a more Korean freedom agenda inside and outside.
But I think, frankly speaking, tax cut is going to be very controversial in this country, because many politicians is now say that we should raise the corporate tax rate.
Well, I mean, I think the corporate tax rate actually is pretty low here, okay?
Their concern is on kind of, I mean, the welfare, something like that. So.
Well, I mean, the best way to, welfare can be improved also by just expanding, you know, having a flatter tax system in this country would be good for welfare. Having a means-tested system for Social Security, which the U.S. should have, okay, instead of Obamacare. That means that, you know, rich guys like me, I shouldn't have to, you know, I mean, I shouldn't expect a penny in Social Security. Well, maybe I'll be poor someday, so maybe I'll need it. But, you know, to the extent I maintain a certain degree of wealth, you know, I don't need the money. I'd rather give it to the poorer people, even though I'm a Republican. But I'd rather have a system that's much more privatized, much less run by the government.
Yeah. So, is there any recommendation you can give us? I mean, regarding the Korea's monetary policy or the foreign exchange policy?
I think you have no choice at this stage, unfortunately, to follow the Chinese around a bit, which you've been doing. You know, you tried to maintain some distance from that, and then now the currency, the yuan, has fallen even faster than the yen. It's a bit of a race to the bottom in East Asian currencies right now. And I'm not going to advocate that Korea should join the race, but Korea just has to watch out for its own interests. Now, that being said, if China depreciates by 25%, you might want to maintain your currency where it is, and you can buy Chinese companies that go into distress strategically, so that Korea becomes the integrator and the consolidator of industry in China, not the Chinese Communist Party. I mean, I think the Chinese trust you. They accept you much more than they accept the United States. And they certainly don't accept the Japanese the same way. So if China needs help from an outside state financially, I would think that there would be a lot of opportunities for Korea and for foreigners also to work with Koreans to help take over Chinese enterprises and restructure them. You guys are insiders in China, but you're not Chinese. And so I think from the United States standpoint and from a business standpoint, businesses that I'm involved in, I want to come here to Korea to look for, you know, how to work together. I think there's huge opportunities.
Interesting, yeah. Let me check a rebound of the U.S. economy. Do you think the U.S. economy is strong enough?
Yeah, I think it's actually getting a lot stronger than people think. The latest jobs number implies that we're going to see a lot stronger GDP in this quarter. I mean, last quarter GDP was revised upward quite a bit, 3.7%, I think, quarter on quarter. I think we could hit 4% in this quarter, just because gasoline price has fallen so much. Gasoline price is the most significant statistical indicator of consumer preference and consumption. And consumption is like 70% of GDP. Now, household savings has been increasing in the United States, actually, and overall, Americans are actually a lot more conservative than they were 10 years ago, because I think it will precipitate, to some extent, a global financial event. I think we need to wait and see a little bit. And, you know, I think the world doesn't live in isolation. The world is highly integrated. But we also, at the same time, if we start to see objective indications of inflation in the economy, we need to get ahead of that. Because we've got so much money floating around that all it takes is a little bit of price inflation for people to start to expect even more inflation, and the situation can start to progress like in the 1970s it did, somewhat out of control. The worst case scenario for the world is U.S. stagflation, which we had in the 1970s, and that's the fear that drives Janet Yellen, I think, and keeps her sleepless at night. She's old enough to remember the 1970s.
Actually, Yellen was my teacher when I studied in Berkeley.
Yeah,
so
she probably talked about the 1970s, I bet.
Yeah. So, do you think there may be any chance of a change in the Fed stance for raising interest rate after Chinese yuan depreciation and the Chinese market collapse?
I think the sequencing could be slightly different. I mean, I'm in the minority that thinks the Fed will delay in September. In October, they normally don't act on interest rates, but they technically can. And several of the Jackson Hole participants, including Lockhart, suggested that October might be the month. I sort of am afraid of October surprise, and I said this today in my speech. You know, I think October could be the time when we see oil price really sell off. Actually, it could be very good for the world economy, but it could be so good for the world economy in stimulating consumption that even though it's technically deflationary, it could stimulate consumption so much that it could actually cause the Fed to want to be even more aggressive. You know, I see, potential for renminbi. I could see the renminbi potentially in advance of an October 27, 28 Fed meeting starting to move toward a greater adjustment. Whether it all happens in a day or a week or a month or several months, I don't know. I know this. I don't think the Chinese can maintain this peg for very long. Okay? I think the Fed is going to raise. It's just a question of when. I mean, it might be better to raise 25 basis points in September and then 25 basis points in December. Okay? I personally think that might be better. But at the same time, 25 basis points is not really, it doesn't really signal to the market that it's over. I mean, it might be better to do 50 basis points in October as a sort of surprise and say, this is it. We're not going to raise now for some time. We've now got some flexibility. I mean, I happen to think the best way to stop inflation in the United States is a strong dollar. So if your Fed's really concerned about inflation, then it should be concerned about a strong dollar. And we've got a strong dollar, and I think the dollar is going to get even stronger. Whether the Fed likes it or not.
But anyway, if the FRB finally decide to raise the interest rates, it may influence huge influence on the emerging market. Huge. Yeah. Especially. It has already started, right?
Oh yeah. Look, when look what happened when we had the taper tantrum last year. We've had actually two of them, right? Really, and but was it last April we had? Was it last year? Time flies, so I forget. But we had all this volatility. No, it was actually 2013, right? Was the first time we had it, right? I mean, so we've had this. April, May, June, crazy volatility in bond prices around the world, based on the tapering. Now we've gone beyond, we've gotten out of tapering, now it's actual interest rate increases, right? Interest rate increases will probably have a bigger effect on, even though they've been talked about for so long, because people have sort of stopped thinking they'll ever happen. So I think if they do happen, especially if it's more than 25 basis points, or if there's a strong statement that it's going to be 25 now and more to come, emerging markets are going to sell off like crazy. I mean, and it's going to be, and then that will lead to greater emerging market corporate bond defaults, or at least rescheduling of payment, which is the first step toward a default.
So we are also worrying about the coming impact of raising the interest rate on Korean economy. So, do you have any advice? I mean, can you give some advice to the Korean government in preparation to prepare for the rate increase?
I mean, again, I'm a supply side guy. I really think that Korea needs to focus much more on the supply side economics. Like Japan too. I mean, Abe has been until recently a lot of talk about the third arrow and not a lot of action. Now they're starting to see corporate tax cut. We're starting to see some more supply side energy applied. Finally, it's taking too long. I think Korea is just with the low budget deficit that you've got, huge, you have a low gross amount of debt, a lot of flexibility here, I know there's a lot of, like you said, a lot of concern about inequality, but cutting taxes across the board, I think will be stimulative and let the poor and middle income people benefit disproportionately, perhaps. But I don't know why you'd need to cut unless you just wanted to follow the currency of China down. I wouldn't want to follow the Chinese down. I'd want to take advantage of the Chinese assets being cheap, have a stronger yuan versus the renminbi, and buy China.
Buy China, yeah.
Yeah. Go on the offense. Don't play defense here.
Let me change the topic. I mean, this question about the Japanese economy you mentioned earlier a little bit. Do you think the Abenomics will finally recover the Japanese economy? And is there anything they have to do further?
They have a long way to go. I mean, there's been a sort of a joke among traders on Wall Street that Abenomics needs to be respelled into Abenomix, Abenomics, because the effect of the policy is not. I mean, last quarter GDP was, it's been revised a bit to negative 1.4%, but it's still declining. This quarter is probably heading towards zero. Now, what Abenomics has succeeded at through monetary policy is weakening the yen and restarting asset prices. So the big success of Abe's policy is that he's created personally a confidence in the economy, which is very important, and he created reflation in asset prices. Japan lost 200% in GDP in asset price deflation. It bankrupted a huge amount of the Japanese industries, a huge number of companies. And that's what destroyed the confidence that people had. That's the deflation that matters. CPI deflation is meaningless in Japan, really. I don't know why Governor Kuroda focuses so much on CPI. What matters really is asset prices. Central banks don't like to talk about asset prices. I don't know that he should target asset prices, but the reality is the thing that makes people want to believe in the future is rising asset prices, especially sort of gradually rising. Low headline inflation, CPI, PPI, rising stock market, strong bond market, rising land prices. That's been Abenomics' success. But as far as the impact of the third arrow on actual growth, it's been negated by the second arrow, the consumption tax, which has been a total disaster. The consumption tax increase in Japan had a much more negative impact than the consumption tax increase back in 1997. And I personally encouraged the Prime Minister of Japan, who I know pretty well, to not increase the consumption tax again and to look at other measures. The Koreans have introduced a retained earnings surtax, very unpopular with business. But Japanese companies are accumulating retained earnings even faster than earnings growth. I mean, what's happening, in terms of ROE, so ROE is going down in Japan, even though retained earnings are going up because they're just accumulating so much cash. It's a liquidity trap. The Japanese got to get out of that trap. So what they got to do is they got to force companies to spend that money. And they got to encourage households to spend that money. Households, before they raised the consumption tax, were spending a lot more money. Consumption has consistently been down ever since that consumption tax. It's now about 57 to 58% of GDP. It was up to 62% of GDP. Given the fact that Japan's population is contracting, and it's going to be a land of a bunch of old people,
aging.
They need to focus on consumption. They need to make a more leisure-oriented economy. They need to change their structure too. And what I'm hopeful is that the Prime Minister, is finally starting to realize this. You know, he's got to punish the companies in industry that don't spend the money to raise wages, to pay their shareholders higher dividends or buy back shares, and he's got to encourage the consumers to want to buy more. So frankly, I think the whole consumption tax thing is and I've said this publicly in Japan, is not a sound strategy. Tax increases are inevitable in Japan, but there's lots of other ways to raise taxes, you know, than taxing the consumer. I mean, I want the consumer to feel very free to spend all the 200% of GDP in household savings that's sitting on the sidelines.
It looks like you are relatively positive on the Korean economy, and you gave us some the policy advice like the tax cut. But here in Korea, we cannot deny that there's also a lot of pessimism on the future of the Korean economy, because, as you know, that the economic growth rate is pulled down, and the main industries such as the shipbuilding and auto is now in very difficult situation for many regions. So how do you forecast?
Well, I mean, I don't know if I'm that optimistic on the Korean economy in the short term. I'm optimistic on what Korea can do to weather the economic storm from China. And I'm very optimistic on the Korean people. But the Korean government and the Korean business community have got to face the reality that there's a lot of excess capacity in this economy, and there needs to be a very aggressive move to promote consolidation. You know, and the problem is, of course, you know, closing factories means you've got a problem with excess labor in certain sectors. I mean, it's sort of ironic that here the Korean people, and this is a real issue, you'll never fix this because you just can't work with the Japanese. Japan is so short on manufacturing jobs right now, and so short on construction jobs, and Korea has so many talented workers that are like really talented, really high. You know, the quality of labor is so high here, even in the more normal jobs like construction and things. I mean, it's like you guys should form an agreement with Japan and export a bunch of your workers to Japan to help the Japanese. You know, right now, and you know, you should form more partnerships cross border. But the problem is politically, you just can't get along. You know, I understand that. I mean, you know, I had my grandfather fought the Japanese. My great uncle fought the North Koreans with the Koreans, South Koreans. I mean, I understand. You know, I mean, there's a history here, even in my own family. But I have to tell you, my family looks forward. We're talking about the future. You know, we're victims of the war too, in the Asher family and my mother's family. But we're not thinking about 70 years ago or 110, 114 years ago. We're thinking about what happens in the next 50 years or the next 20 years. And I think that's where South Korea and its people need to get going. I think the Japanese need to do that too. No more Yasukuni, no more. I mean, if they want to do that on a personal basis, they can do it on a personal basis. But I really oppose, as you know, the sort of state level worship of, you know, it's not worship of war. It is respect for people that died during the war, even some, you know. And they say it's not the war criminals, but it's emotionally stinging to me. Even though I like Prime Minister Abe, even though I really, you know, respect him and think he's doing overall a good job, you know, these things are just not necessary. We got to be worried about the fact that Chinese just rolled out brand new bombers, missiles that can attack aircraft carriers, you know. And by the way, the U.S., China, and Japan are all heavily invested in. I mean, U.S., Korea, and Japan are all heavily invested in China. I mean, we're heavily invested too. And a lot of U.S. companies that want to get their money out can't get their money out right now because the Chinese won't let them shut factories. We're all in the same boat together here. But if the Chinese start acting more militarist and mercantilist and continue to do these crazy cyber attacks that are destroying intellectual property for all of us, not, you know, United States, South Korea, Japan, Europe, it's going to upset our global prosperity, which is what we depend on in common with the Chinese. The Chinese don't seem to understand that they're more dependent upon the globe than anybody. So why are they doing so much to put it in distress? I don't know why.
Yeah. This is my last question. I mean, as you said, when it comes to the next year, the global economy, I mean, one of the main issue will be where the Chinese economy will go to. So, regarding this, considering this, so how do you expect the global economy will be like next year?
More volatile. Look, I think the Chinese are going to do what they have to do to protect the Chinese Communist Party. I wish they were going to do it to protect their global interests, but because I think the Chinese will allow a currency revaluation, that's how they'll express it, rather than devaluation, and because I think the People's Bank of China has a lot of room to increase, money supply to help recapitalize the banking system, which I can't figure out why they're taking so long. And because Korea does export a lot to China, but Korea also can become an acquirer in China. I mean, I think that China's going to bring a lot of volatility in the world economy. Okay, simply put, emerging markets are in trouble. Korea, luckily, is not an emerging market. You're a much more developed market, but you are dependent upon China. But because if the Chinese adopt this policy, they can restore some growth in their economy. They can go from 3% growth maybe back to really 7% growth. Okay, but they're going to have to do that. They're going to have to adopt a policy framework. Right now, they've got a policy of paralysis. I mean, it's confusion, maybe mixed with a bit of delusion, And I think that they're not, I think it's very important for this government, given its close ties and the excellent relationship you have with the Chinese authorities, to have a sit down and talk strategy based on your own adjustment experience. And then, like I said, you're going to have to adopt the adjustment policy, which I think is different than just following the Chinese down into this, weakened currency. You're too developed, and the value of the stock of wealth of Korea is too valuable for you to just cheapen it. You need to think about how to deploy it more strategically for the long haul, and not just throw your money, down the tubes with the Chinese.
지금까지 들으신 것처럼 데이비드 L.애셔 신미국안보센터 선임연구위원께서는 중국과 일본, 미국 등 글로벌 경제에 대해서 통찰력 있는 의견을 제시해 주셨습니다. 시청자 여러분께서 글로벌 경제를 이해하는 데 많은 도움이 되셨으면 합니다. 오늘 바쁘신 일정에도 인터뷰에 응해주신 데이비드 L.애셔 선임연구위원님 감사합니다. Thank you so much.